Happy Tuesday there, Mavericks. This is Rob Reinhold. It is June 17th. Let's jump into it. In this session, we're going to go through the news of the day. We're going to take a look at the oil markets, big moves up on an attack from Israel on Iranian oil fields, and then we're going to take a look at some setups.
All trades and analysis in this video are intended for professional traders only. This content does not constitute financial advice and is for educational purposes. This video is being released after a short delay due to Compliance Department review. Maverick members receive this content immediately as part of their daily trading resources. If you're ready to level up, consider joining Maverick Currencies. Our traders trade firm capital and keep 70 to 80% of profits. You bring the skill, we provide the backing. Let's get into today's market recap and see how the pros are trading the currency markets.
Right, let's go ahead and start out with some of the news of the day. We heard from the Bank of Japan last night, and it was a very quiet meeting. They basically did nothing with their rates, and they said they're going to curb future bond purchases, which was already expected in the market. So the yen really didn't do anything on the news. It did creep higher during the day because of a risk-off move, but there was really no move from the Bank of Japan. We got a big move in oil overnight as Israel struck some Iranian oil refineries. So oil is now jumping to the highest level of the year, and I don't see any reason why it doesn't keep going higher. Unless there's some huge ratcheting down of tensions, which doesn't look like it's going to happen. I see oil just keep going higher. Look, it's not going to scream higher, but I don't see any reason why we don't get another 10% higher from here. It's not really going to affect currencies all that much because they're looking more at long-term supply and demand issues when they're looking at stuff like the CAD. Here we have the Forex movement of the day, and you can see there was really one trade here, in my opinion. The only trade that made any sense, and it actually didn't make any sense, would be long dollar. Yes, the pound was weak as well, and we talked about the pound being weak, but take a look at if you paired anything up against each other. If you paired up Euro CAD or you paired up Aussie Kiwi, nothing worked today. It was really just you had to be trading dollar or maybe you were trading pound and got lucky there. But other than that, very, very flat day. The dollar, there was no reason to be long dollar on any sort of charts if you're a trend follower. That being said, I love the fact that the dollar had a pop because I've been waiting for the dollar to pop so I could get a better short entry. So we will see if that dollar short looks like it could be right around the bend. We do have Fed meeting tomorrow, so that's what I'm going to be looking at going into that Fed meeting. Equities were down about 1% across the board, crypto down. Take a look at that jump in oil, 5.22%. Just a big move overall in the price of oil. Checking in on the cryptos, you can see they were mostly down across the board. Bitcoin Cash was up slightly, but 2% pullbacks, that's not that big of a deal in the world of crypto. The big question is, has anything changed? And if anything has changed, we've gone from a +3 to a +2. And the reason why we've done that is that this 20-period moving averages has started to flatten out. So we no longer have both of them clearly sloping higher. Once that changes, if this slopes back up, we'll go right back to a negative to a +3. But as far as right now, that's where we are. I want to spend just a few minutes to talk about this market. I've been very clear for the first 2 weeks of June. I said, hey, we're in low volatility, low volume environment. Expect a slow move higher. And look at these candles, really narrow candles, really small candles, and we've just crept higher. Last week, that all changed when Iran attacked Israel. And we now have a slightly bullish market, but with high volatility. As you can see, we haven't really gone anywhere. This is Thursday. This is Friday. This is Monday. This is Tuesday. As you can see, we're slightly up for the week. We're slightly up from Friday's close, but we have a huge range now, whereas before we had really small ranges. I think we're still in a slightly bullish environment, but now with high volatility. Now, what does that mean for traders? If you use tight stops, this kind of a market is going to chew you up and spit you out. you're going to get chopped up 1,000 times trying to make trades because nothing has any follow through. Take a look at these candles. One day down, one day up. One day down, one day up. One day down. Tomorrow's probably going to be one day up. If you're trying to put together 3 or 4 days in a row of holding something and moving up your stop, you're getting chopped out. It just isn't the right market. So how do you trade a slightly bullish market that has high volatility? Well, guess what? You're really looking for the red daily candles. Take a look at it. These are the days that you could have actually made a decent trade if you were looking for bull pullbacks off the bottom. And I think that's what we want to be looking at is on down days. Again, this is just talking about equities, like if you're trading equity futures or something. On down days, you actually want to start looking for a reversal because that's what we've had. One red, one green, one red, one. There's no reason that is likely to change, in my opinion. Let's take a look at the calendar because we do have some big stuff coming up. Before the Fed, we've got the CPI coming out of the UK. This has been disappointing lately. We'll have to see what happens on this. Tomorrow, we've got the FOMC statement. All right, we are going to be meeting live. Ankit's going to be there at 1 p.m. Eastern time, so I'm sure he's going to be talking about that in the live midweek. If you can make it, it's always great to have some discussion and some talk about trades going into a major report like that. That night, we've got both Australia and New Zealand both announcing some pretty big reports. So if you're trading Aussie or Kiwi, you definitely want to be watching for that. Let's run through some currencies. Let's run through crypto first because crypto to me, and this is a 4-hour chart. Let me go to daily charts. You can see daily charts. The only thing that looks decent on daily chart is Bitcoin Cash, but everything else is not great. So if there's any trade to be had in crypto, it's going to be buying a pullback off of Bitcoin Cash. That's really all there is. And that is definitely not my style of trading is to, go after this at trying to get in at 470 and maybe sell it at 480. There's just not enough meat on the bone on that one. That's like a 2% return on crypto. It's just, for me, I'm looking for like 5 to 10% minimum on a crypto move. If we go into Forex, let's talk about, again, what we're looking for. We're looking for things that are going to be moving in the next 24 hours. So as you can see here, we've got the yen has fallen. It's having a bounce. It's in the middle of a bounce. Yes, it's going to be likely a decent short at some point, but is it going to be now? Probably not. Probably not. We still have a little bit of a bounce left to go. We have the dollar that's bouncing up. It's having a much bigger bounce, and I really like this on a daily chart. We've come down here. We have now moved from a low level. We're having a decent bounce. Anytime we've had a decent bounce in the dollar over the past couple months, it's been a decent shorting opportunity. It's not ready yet, though. Take a look at the shorter term charts. It's still screaming higher. So you don't want to be short dollar, but that is the trade I'm looking for after the Fed meeting. Swiss franc, going nowhere. Going sideways, moving average flattened out, RSI flattened out, euro flattened out. These are just a no touch. I will not even look at these on a chart. I refuse to look at things that aren't moving. Here we go. Now we're getting some movement. Pound is clearly moving. Question is, how much more downside does it have? Is it going to have a bounce? Is it going to have a base? Where is the next opportunity to get into it? But pound is definitely moving at the moment. CAD, you can see, is just hanging out in this area. I need to see a clear break, down in here for me to even get interested in CAD. So for me, CAD is on the shelf as well. Here we have the Aussie run up, pull back. We now made a lower low. Yeah, I'm decent on Aussie short. Take a look, we've got moving averages that for about 3 days we had a upward move and we're now starting to turn back down. Everything's starting to look more bearish here. Same with on the Kiwi. Starting to look more bearish right here, right now. Again, flat RSI, sort of flat EMA. I think you want to be patient and let this trade develop. When we take a look at where things are right here, right now, the only thing moving higher is the dollar. That's it. Everything else is at 0 and lower. I do like this Aussie and Kiwi, especially if we get another day of selling tomorrow, but I am in no rush. I am in no rush to get into these trades. The pound is moving right here, right now, but it's also had about a 1 or 2 day sell-off, likely going to get a bounce or a base. So let's go in and see if we can find something. But you can hopefully hear my voice. This isn't like my great setup. This isn't like, oh my gosh, I can't wait to get into a trade here. It's just not. If you were looking purely at relative strength and weakness, it is pound dollar. Pound dollar. And if you take a look at a daily chart, can you make a case that, okay, we failed to make new highs. If we break below this 134 area, it's going to signal that we're now in a longer term downtrend. You could, there's going to be some trend lines here that probably going to provide some support in there. It's not a great trade. It's not a great trade. This is just something I'm not looking at. I do like Aussie on the short side. The question is, what do I like it against? On a velocity score, the dollar is a place to be, but if I take a look at a daily chart, a trend score, the dollar is not where I want to be. That's like a -3 on trend score. I don't want to be there whatsoever. The euro and the Swiss franc were where the strength is, and they're just not showing it right now. So, I'll take a look at euro, Aussie. I don't love the pairing, and you can see here, this is just, there's no reason to click a button. There is just no reason to click a button. Some days you just can't find the trades that fit. This is where we sit on our hands. And remember, we've got a ton of news coming up. We've got tons of stuff coming up tomorrow with the FOMC meeting and with Aussie and Kiwi that night. Look, just be patient. Let these things develop. Wait for that perfect moment. Then you grab your trade. Don't get impatient and chop yourself up before that. What I'm saying is, get ready. We got some good trading sessions coming up, but it's not right now. It is not right now. So let's put on the brakes. Let's wait for that volatility and that movement to happen. Then we go in and grab our trades. Thanks for joining me. Goodbye, everybody.